Yeah, I'm trying to play through everything in my brain.
I got you, but you have it here, so.
Yeah, I know, that's why I'm trying to.
He's really good too, so if it's Steve, he can at least come look at it and let you know if you think it's.
Okay.
His machine
Yeah,
can do it.
that's a good point. Yeah.
Good morning. Okay. Good morning, everybody. Thanks for waiting a few extra minutes here. It is September the 30th. We're here this morning to review the budget audit that ended fiscal year June 30th of 2024. And before we get started, I'd just like to ask everybody to please keep Mayor Haas in your prayers and his family in your thoughts and prayers as well as he recovers from a health episode over the weekend. We've certainly been thinking a lot about him and we'll miss him this morning. With us this morning, we've got John Chamberlain with Chamberlain Owen, the accounting firm, and Linda Chapman with our finance director, for those who haven't had a chance to meet, with our finance department rather, for those who haven't had a chance to meet Linda yet.
Temporary finance director.
Well, that's the key word there.
Unfortunately.
Right. And I trust that council's had a chance to review the audit. I'm going to withhold comments and questions until after we hear from John. So with that, I'd like to hand it right over to John Chamberlain, please.
All right, thank you very much. I appreciate it. My name's John Chamberlain. I'm a CPA and partner at Chamberlain Owen and Company, and we're a CPA firm in Erlanger that specializes in audits of governmental entities, city governments, and over my 21 years doing this job, I've done audits of cities like Newport, Fort Mitchell, Fort Wright, Alexandria, let's see, I have a whole list. Dry Ridge, Walton, Edgewood, Independence. So I know what it looks like when I come in and the audit has been prepared, cities are prepared appropriately to be audited. So what I'm going to do today is I'm going to start with a little bit of a timeline of kind of how things work. I wouldn't normally do this, but because we have some issues, I think it's appropriate to put some of this in perspective of some like time of how things transpired. So it'll take just a little bit longer than a normal audit presentations, and I apologize for that. But I think it is important, and I will ask you if you can maybe hold questions till we kind of get to the end of that timeline. There's a lot of rabbit holes we could go down. And I would appreciate just maybe let's keep the timeline going, and then we can go into in depth because some of the questions might get answered later on. We started our audit field work in January of 2025, which is a little bit late for audit field work for a city. Since you have a June 30th year end, we normally do these September through December. And January is a little late for us. We noticed immediately some significant issues, and I'm going to go through some of these. Some of these might not make sense to you, but there are things that as auditors we see, and they're kind of big red flags. Your prior year fund balance that rolls forward should be exactly right. You know, your fund balance should roll forward to this year. We noticed it was $11 million off. That's an issue. No fixed asset schedules were prepared and ready for us. You have a due from the funds and the transfers between funds. Those should all reconcile to zero. Those had not been reconciled. You had ARPA and opioid funds that had not been recognized appropriately. You had a development agreement from a few years ago that had not even been put in your books. And then most disturbingly, a general fund cash reconciliation that had not been done. So we notified management of this pretty immediately that these were significant issues, and these were things that were going to have to be worked on. Over the next few months, Joe fixed some of the items. The fund balance thing really was just a software issue. It wasn't really a problem. It took 2 minutes to fix. He prepared for us an adequate fixed asset schedule, so those were things that he did accomplish. On 4/14, he provided us his first iteration of a cash reconciliation for the general fund, and it was basically missing one of the accounts. You have about 13 accounts in there. It had 12 in it. We later found out, and it was still about $361,000 out of being reconciled. And just to let you know how things work in your financials, things are set up a little differently. In most cities, you have a cash account with a financial institution, and then an account in your financial statements. And when I say financial statements, I'm talking your Springbrook. So in your Springbrook, you'll have one account for each financial institution that you have an account with. The way Fort Thomas was set up is when we came in was that you had these 13 accounts and they were all rolled into one account. Normally, cash accounts would get reconciled at any business or any city, any small nonprofit. Your cash account gets reconciled on a monthly basis. Joe was reconciling these on an annual basis, and the reconciliations just weren't working. We saw that as a huge problem. Sometime in March, April, I think Joe's health became an issue, and Matt asked for help. He asked for recommendations of someone who could assist him on a temporary basis. I recommended Linda Chapman. Linda had just retired from the city of Florence. She has 40 years experience as an auditor and a finance director. I think she started when she was 5. Isn't that right, Linda? Just didn't want to get on your bad side. There is no one that you would rather have in Northern Kentucky that I know solving a problem for you than Linda Chapman. She knows more and is more capable than anyone I know. So she has my highest recommendation. Linda was able to, in just a few short months, reconcile the due to, due froms, balance those out to zero like they should be. She reconciled the transfers out to zero. She split all of your cash accounts out into individual accounts so that now the trial balance has each financial institution, each of those 13 accounts has their own reconciled cash accounts. She reconciled all those cash accounts to within reason for 2025. And then went back and started reconciling 2024, which was really out of the scope of what she was hired to do, but we felt it necessary. And Matt agreed that that was something that she should do. So she went back and began reconciling 2024. As part of that process, we requested the 2023 cash work papers from the prior auditor. And this is where I want to walk a very fine line when talking about a prior auditor, because obviously professional issues, they're professionals, and Mr. Sparrow was a very respected auditor for many years at Rankin and Rankin, and he had been with Fort Thomas, I'm guessing 30 years at least. It might be more. I'm not 100% certain. But I don't know his history with the city. I don't know the things that he's seen. I don't know, all of his experiences, and I don't know what he saw last year, okay? And I've not had the opportunity to ask him that. And, the audit standard for work papers for an auditor is that if I do an audit work paper and then next week I get hit by the proverbial bus, and someone at my level of experience, somebody that has audit experience and, is a senior auditor, should pick up my work paper, and it should make sense. They should be able to follow that work paper and understand what I've done. I am going to say that the work papers we were provided did not meet that standard. We were provided an email from one of his senior auditors there at his firm. He was incapacitated at the time, and I don't know if you know, he's since passed away. She said in so many words that they've had trouble with the cash position here at Fort Thomas for years, and his audit work paper bore that out. It did not match the trial balance like it should have, and it did not work like it should have. And when she said they've had this problem for years, it led Linda and I to believe that this is an account that maybe has been misstated for at least several years, if not more. Linda made significant adjustments and reconciled the general fund cash account to within $322,000. That was just really as close as we could get it, or as she could get it. I don't want to include myself. She did all the work. That's as close as she could get it. And she recommended to Matt, and Matt agreed that they would write off that $322,000 as an error from the past, and they made what's called a prior period adjustment. The prior period adjustment included recognizing revenue from past years and several other things, opioid and ARPA revenues, your development, what's the name of the development? Glen Highland Development, $850,000 that you expended on that. Thank you. So they ended up making a prior period adjustment right at $1.15 million adjustment to your fund balance. So, and then wrote off the $322,000 out of the cash, out of that general cash account. So, as a result of all of that, once she was able to do all that, we were able to complete our audit process and feel comfortable that things were like they should be moving forward. We have given two significant audit findings. The first one is what's called a qualified opinion. That means that we believe that your financial statements are fairly stated in all material respects, except for the cash account, which had to have $322,000 written out of it for it to move forward. And so that is a very rare opinion for an auditor to give. I think in my 20 years, I don't think we've ever given a qualified opinion. So just to show you how rare that is. But that's basically saying that $322,000, in an accounting term, we'd say that's unaccounted for. And I'll let Linda address this. We have no reason to believe it's been misappropriated. We think it's just been mishandled in the accounting. Okay? And Linda can address that in a moment if you'd like to. The other significant finding that we have is just a lack of internal control over financial reporting. This is a more common comment that we give, or a finding that we have, and that because of the fund balance issue, the delay in receiving fixed assets, the cash reconciliation, the due to, due from transfers, unrecognized revenues for the opioid, the One Highland, the ARPA funds. We had to give a lack of control over financial reporting. That means that the process in place here for your financial reporting was not acceptable. And then at the end of the audit, as we were putting things together, we noticed, really due to some of the changes that the adjustments that we had made was really the primary driver on what made this so big, but that we did do a non-compliance, and that's a non-compliance with Kentucky revised statutes. Kentucky city governments are not allowed to expend more than they budget. They are allowed to amend their budget, and you had the opportunity to do that. But really, because of some of the adjustments that were made is really what exacerbated the problem. You did expend about $1 million more than you budgeted in the general fund. And so that technically is a non-compliance with Kentucky revised statutes. So on top of that, we made the prior period adjustment that I mentioned earlier of $1.15 million. And then we also provided 6 management comments. And the management comments are very, they're really 8 management comments, 2 are the findings. But the other 6 management comments are items that just are there to provide control, suggestions, things to help the city, internal control policies, fixed credit card policies, things like that. So that's my timeline. Those are the things that those are the findings that we have. Are there any questions that I can answer about that?
I have a question. So thank you for the due diligence and going through the details, and I appreciate Linda, especially for all the work that you put into this, so thank you for that. How does something like this happen? I mean, how can we avoid it from happening in the future?
As far as the prior auditor, I'm not certain. That is, Linda knows that situation as well as I do. I'm surprised that a comment wasn't made at some point along the way. As far as your employee, requiring monthly bank reconciliations. So what you've done in the past, I really can't say how it got to this point, because I'm looking at 2024 by itself. So I apologize for that. I don't know your full history. I do think the prior auditor should have said something. There's obviously something was not right there.
Yeah.
And Linda,
And I'll just jump in here real quick. Just from what I've looked at, obviously on your computer system, Joe had prior year audit files. We went back to, and even when Joe came back from his illness, we went back to 2016 and tried to figure out some of the differences in the bank recs, because the bank recs never did agree to the general ledger, the trial balance. Part of that's on the former finance director, part of that's on the auditors. There should have been adjustments made, there should have been management comments made. Another problem that I believe contributed to that was your accounting system. It wasn't really a accounting system. You do have a system in place now, Springbrook, that has all kinds of functionality, all kinds of controls, audit trails that you can go back and check who's posting what, who did what in the system. So moving forward, those issues should be taken care of. But I do believe it's a combination of lack of commenting on the auditor's part and letting that accumulate and go on for years to the point where it got to this accumulation. Sometimes it was over, sometimes it was under, and I don't know why they didn't make comments. I don't know why they didn't make adjustments to adjust it to the trial balance and make prior period entries. Why they kept letting it roll, I can't answer that. But then I do also know that the accounting system you had in place was not a GAAP accounting system. It was like this one-off type thing that had been developed internally, and it wasn't really what we call a formal accounting system.
So the 322 that's not just from 1 year, that was from over a period of time? Okay, so it could have just been, probably was just a misalignment of.
Yeah, it's accumulation. Like I said, I went back to 2016 in the file folders and looked at the bank recs, and they were either off. Sometimes they were over a little bit, sometimes they were under, and adjustments were never made to reconcile it to the trial balance. And because of letting that go on, it just kept snowballing and snowballing and snowballing until it got to the point where, okay, you've got a great system in place now, you've got the proper accounting systems in place, we need to do something about this, we have to stop it, and now is just time to bite the bullet and make the adjustments.
Yeah.
and I want to reiterate, the other thing that you've done to change moving forward is you've moved all of those individual bank accounts into their own line items in the trial balance. They're not aggregated on the trial balance any longer. And also, Linda's been reconciling them monthly, which is what you should do, and I'm assuming that Matt will make that policy going forward to reconcile those monthly, and that was in our management recommendations as well.
Yeah.
The cumulative balance of those accounts that you're talking about all flowing into one checking account, I think?
It's the other way around. It's multiple, it's like 13 different checking and investment accounts flowing into one line item on the, and so it's reconciled as one account when it really should be reconciled as 13 accounts.
So now we have individual accounts for those, so they're easier to reconcile.
Much
on a
easier to
monthly basis.
reconcile on a monthly basis, right. And it's always easier to reconcile something on a monthly basis than an annual basis. I mean, you get 12 months worth of something versus 1 month.
So,
Discussions for having with the Kentucky budget.
There really aren't any. I mean, technically it's a violation of Kentucky law, but there aren't, a law with a rule without a penalty. Yeah, there's no penalty attached to it. But it's something, we point out just, to keep you, to keep everybody following the law and that type of thing. But there's no repercussions.
so when I got here in '23, that was one of the things I brought to council at the time about Springbrook, right? Because when I got here, I was not able to see any budget line item, which was an issue for me, especially from what I was used to, and to be able to run the city, we had to be able to have, at least me, be able to see budget lines. But we really want to have the department heads and be able to see all those budget lines, because they're the ones that need to be managing their budgets. But when I got here, if you wanted to know that, you'd have to go to the finance director. That was the only way to know. So that's why we implemented Springbrook, and council approved that expenditure to get that rolling. That came in, we started that late '23, so this was a '23-24 budget, that the audit that we're talking about. So Springbrook wasn't fully implemented at that point either. So that was one big issue that I had talked about, and you guys had approved for us to move forward quickly on that, which was good. The other thing is and we had talked about this back then, that we'd had the same auditor for a long time, and you really should switch up, for a while. But additionally, when the first time they did the audit, it didn't feel comfortable. Like they didn't, I've had John for 5 years at my last city, right? So I knew what right looked like, and he would always help, how do we improve things? Because every city can improve, and we weren't getting that from our last auditor, which was why we had pushed to try to get John that next year. John's schedule was so busy that we had to wait till this year to get him in. So just want to give you kind of a background. That's kind of the stuff we had talked about early on, and now it's just took this long to get John in here without knowing the issues with the previous auditor, because that's what I rely on, that's what council, that's what the mayor relies on to make sure that we're accounting properly. I mean, it's one thing I've always been able to look at the accounts and make sure the money's there, right? But to be able to know that we're doing the accounting part right, that's what we rely on. Because I'm not an accountant, so I don't know I know what GASB, and I know different, GASB rules, but to be able to actually do them and make sure that they're done is a challenge without an auditor that is able to walk you through that.
So to your point about all the money being there, I'm curious, so this is a fiscal 24 audit. We haven't done the fiscal 25 audit. We as a finance committee made decisions for a fiscal 26 budget based on those numbers. And to your point, balance sheet stuff, fund stuff, I think we call it a statement of net position or something like that. But your ending balance should be your next year's beginning balance, and it rolls forward. So if we're off on 24 and that rolls forward, were we making?
I think you should be rolling those forward correctly, though. Is that correct, Linda? Yeah. Your fund balances should be rolling forward correctly.
Yeah, when you amended the budget at the end of, in June of 2025, those fund balances from the prior have been rolling forward. Now, as far as the budget for this year, we're still working on finalizing June 30, 2025 numbers and making sure that where we stand as far as if it's over budget this year or not, or, we haven't gotten that far with the audit numbers and the accounts payables and receivables.
And I think it's fair to point out that, and reiterate, I said this earlier, that I think it was 600,000 of that 1 million that you were over budget was one line item that basically we adjusted in to clean things up.
Was that the 660?
Yeah, there was due tos and due froms that had been on the books for years. Some of them went back all the way to 2010 was as far back as I could trace them.
So that didn't have anything to do with the pilot payment from One Island?
No. A separate issue, and we just decided that if we're cleaning everything up this year, let's just clean it all up, and so that we know when we're moving forward July 1st, we've got good clean numbers. So it was just
You're
like,
still over about 400,000, but much less. Most of that was Tower Park issues, Tower Park funding.
Did you find any reason to be concerned about the ARPA money or anything not being filed correctly, considering that it's so important for us to make sure we cross our T's and dot our I's when we're using federal or state funds?
Yeah, absolutely. We've talked a lot about ARPA money and this whole thing. One of the items that was like misrecognized initially were the ARPA funding, and I think they've gone back and looked at the reports that they filed with the Kentucky Department of Local Government to make sure. The good thing about the ARPA funding is there's almost no wrong way to use it, because it's not like the opioid funds where there's a very strict set of limitations of what you can use it on. Really, as long as you're not paying your pension off or paying off your debt, You can use, and there's, I think, one or two other small things. You can use it on almost anything. You can use it on operating supplies.
Yeah, the state, when they gave out the ARPA money, they basically were having so much trouble trying to define what you could use it for, what you couldn't use it for, what size city you could do this, that.
Right.
And they basically said if you're receiving under $10 million in ARPA funds, you can use it any way you want for any type of infrastructure, public improvement, streets,
It
capital.
changed over time. It
Right.
evolved.
It-
I think we actually got
so-
lucky
It did
considering
evolve.
how
It
we
did
were
evolve.
handling
You're
it, to be
correct.
honest with you.
Yeah, it did evolve.
Can you explain to me the opioid funds? I'm sorry, I'm not familiar with that.
Absolutely. So the national opioid settlement, I don't know what the total amount is. It's in the billions for across the country. It's the Purdue Pharmas, and then all the distributors, the Walmarts, Kroger's, Walgreens, everybody that distributed opioids. It's a national settlement with state attorneys general. And not every little city, but most cities are getting some little sliver of that settlement over the next, it's like about 20 years. It's so much a year for 20 years. And they all, there's different tiers of the settlement. Like I said, the distributors, Purdue Pharma is one of them, the Sacklers, the Purdue Pharma, the Walgreens has their own individual settlement. CVS has their own individual settlement. So they all have different payouts over that period. They're all very well-known, well-established numbers and agreed upon. There's a law firm that manages all that, has put a database out, and you can look up your settings, how much you're going to get. So those are well-known. So the accounting function for that is that you should recognize a receivable for that, a long-term receivable. Basically, you defer the revenue until you're ready to expend it, and then you can only expend it on very limited items. And we are really pushing it in Northern Kentucky, and I don't want to get on a soapbox here, but we're really pushing it on. We're expending it for some social service organizations that are social service employees that are attached to police departments, the Angel service.
Have you corrected ours so that they've been filed correctly now?
Yeah, it was just a matter of setting them up on the trial balance on the general
Okay.
ledger.
Yes.
They had come into the bank account, but they hadn't been recognized as deferred revenue, so those have been set up. I know through June 30 of 2025, you had like 493,000,
Well, that's significant.
and I know you just got about another 30 or 40,000 in August, so you're probably up to about $540,000 right now.
Yeah, you're probably getting about 30,000 a year, something like that.
What was the, when you were, the cash that was paid out for the development agreement? Was that the 850 you were just talking about?
That is correct, and that was one of the first things that we found and noticed, and it was a significant,
No, was this the?
red flag.
Was this
So
the
he
green
had
line, or
said,
was this-
yeah, it was Green Line.
Okay.
I didn't know where he was going with that, but the development is one Highland, but the eight.
Yeah, it's actually Green Line. You're
But
right.
it's,
Thank you.
yeah, it was the building.
Yeah, I want to make sure I get it right, because they are different. And so the initial problem with that was they transferred the funds out, and I think maybe he didn't know what to do with it, and so he just didn't recognize it in his books at all, but it left your cash account, and he's got it as a reconciling item down here saying, yeah, that's something we paid out, but we're supposed to get it paid back, or we're supposed to forgive it, and I don't know what to do with it. And it's like, well, it needs to be entered into your accounting system. You can't just keep it as a note.
Which is listed as an asset. as
Well,
well,
it's
right?
it's a receivable, yeah, as an asset, as a receivable.
And actually, I don't want to complicate it, but actually, because it's a long-term note, and there's payments required on an annual basis, and then, you do what you do with it after they make the payments. So as you get the payments in, the lease payments in every year, you recognize that revenue, but right now, it's a receivable and a deferred on the books because of the long-term nature of that $850,000.
Yeah, there's some governmental accounting complications that we can put you to sleep with.
So does it just come into a receivable in the given year that you're owed for that year? Is that what you're talking about? And the rest remains deferred?
Correct.
For later periods?
Correct, absolutely.
Go ahead.
Go ahead, if you're still on that thought.
Well, no, I changed.
You changing?
You guys are too kind. Nobody's going to get through this intersection if somebody doesn't move.
Keep moving. I just wanted to go back to the, when we were talking about the 2020, or the, 2025 fiscal budget. So you were talking about the timeline of getting those things done typically. So is there anything that's impacted getting that, with all this stuff we're talking about, getting that done on a reasonable timeframe? That
2025 audit,
What's that?
the 2025 audit.
2025 audit. I'm
Yes.
just wondering what a reasonable expectation is to have those numbers now.
Linda has sent me everything but the general fund. She says she has one adjustment to do on the general fund, and we're scheduled for October, oh, I'm sorry, November.
Yeah, it was October. I've been trying to get John early. No, November
15th or
that
16th
Monday.
or something like that, yeah.
Okay.
So we're scheduled, and she's already sent us everything. We have one fund trial balance to receive, so.
Great, thanks.
And my understanding is, I believe we're anticipating having the similar conversation if you get started in November, sometime into the year, early January on fiscal year '25.
That would be correct. That would be,
Okay.
our goal would be to do this in January, for instance.
It's not that soon.
So
It won't be, hopefully it won't be similar at all. It won't be similar at all, I guarantee.
On page 49 of the audit, you have the, essentially what looks like our financial statements. However, there's kind of one point and one question. One point that I would have is that we could have, like, the actual line items should be the same. So there's slight difference in some of the line items or accounts to where when we're looking at these numbers.
Oh, compared to your budget?
Compared to our budget.
Okay.
So if either we change, but whatever that is, I think it would be good that all of those line items actually match up.
I would request, Matt, maybe if you could tell me which ones those are, because I set this up based on your budget, so.
Okay. And then
Okay.
secondly, if you look at, under licenses and permits, so our final budget, we've got roughly 7 million, and the actual was a little over 9 million.
It's actually, yeah, right.
So what was that difference in $2 million? It's hard to pull that out of the air, but
I can't tell you.
would that have been?
I can't tell you off the top of my head.
I wasn't involved too much in the actual details of 2020.
I'd have to go back and look for that.
Okay.
I'm sorry. I wish-
No, that's
I wish I knew all those off the top of my head.
And
Some I
know
do, but that one I
know it's
did
hard,
not.
and, to pull that kind of thing out. I just didn't know if it was something that.
We can look for that if you'd like me to. I can.
One other thing. So you do Cold Spring as well, correct?
Yes.
So in Cold Spring, Cold Spring for the past number of years has been using Munninghoff and Lang.
That's correct.
In Covington, where they come into the city and they actually provide a service to prepared where you don't necessarily even have a finance director full-time.
That's correct.
Could you talk about that situation in a city, and if you think that that would be a good fit for Fort Thomas?
Yes, so that's what they do. They are, to be fair, they are new to governmental accounting. I've been bringing them along. They're very good accountants and very good business accountants and that type of thing. But governmental accounting is a little weird. We do things, we don't put assets on the balance sheet, for instance. We don't put debt on the balance sheet. So there's things that are very unusual for them. But we've brought them along, and they've done a really nice job in Cold Spring. It could be a cost savings if you had someone here at the department who can handle some of your harder tasks. Like they do come in, I think they do the bank reconciliations. They do the significant amount of the accounting entry work.
And then they package it essentially for you. And do you think that makes an audit cleaner?
It can based on, like, would I rather have Linda Chapman or Lenny Kuntz at Newport or Amy Gunther at Fort Mitchell? Yes. I would much rather have an employee there who knows the business and knows the organization and knows the ins and outs. That's the best scenario, quite honestly. But however, they can, Cold Spring wasn't going to hire a full-time finance director. It's not in their budget really. And so that's the next best option to having the clerk do it, for instance.
Yeah, and just to jump in there real quick, there's pros and cons to both scenarios on that side, but the one con that I normally see on that is that when you've got somebody coming in at the end of the month and reconciling the books and going through things, they're not here for the daily activities. So when you get into issues where, okay, why is this over budget or why is this not over budget? What's going on with this account? Why is it so much higher than this? They really don't, they're going to go, well, I'll take a look at it. They're not going to know things that a finance director that's looking at this, your financials and your data on a daily basis that should be following and making recommendations internally and providing information on how to prepare next year's budget and amend this year's budget and, a financial plan of like, oh, okay, it looks like we're starting to run out of money. We better start adjusting and looking at different things for taxes or waste fees or those types of things. So they come in and they provide a service. They don't, it's not something that they know the ins and outs of a service. You're basically paying them to come in and do a job at the end of the month, do the reconciliations, and then that's about it. So if you're looking for somebody that knows the ins and outs and can answer questions for you and help project financials in the future, you really want somebody on staff to be able to do that.
We actually do that service for a couple of cities. We do that for Edgewood. And I will tell you, we don't know Edgewood as well as someone who would be their finance director. We don't know the ins and outs, the monthly. We prepare their financial statements at the end of the year. I go in at the end of the year, and I have to do a lot of digging to kind of prepare their financial statements at the end of the year because I don't have someone along the way who says, oh, yeah, I know about this. So.
I think you can understand our concern at this point, trying to explore all avenues.
Absolutely.
Absolutely, yeah. I think it's.
We've had a finance director for a long time, still running into troubles, and I can understand that the old way was not the good way, but I don't still think we should have done the whole this, no matter how we're keeping the books, whether it's on Excel or QuickBooks or, through Springbrook.
Sure, understand.
I mean, I know in my personal work, fortunately, I had some bad accounting the first few years of work, and it cost me over 10 grand to get out of it. You know what I mean? To clean it all up, which does happen, you know what I mean?
It does happen.
My Peachtree is what I use, and it doesn't let me balance out. Like, I can't close a page on a general journal entry without balancing out, right? So,
And you can go back and change anything you want without even making journal entries. You just click on it, open it, and change it.
Yeah, so it's just, to get this far off balance is a little disturbing,
Yeah.
so I think it's a valid point, I think an in-house one is great, you know what I mean, but you never know.
Sure.
So,
And then, Andy, I just want to take you back. Your question on page 49, if you could turn to page 7, please.
page 7, you said?
7, yeah. On that table there, if you look at the license and permits, it gives you a comparison of 23 versus 24. And you can see the 9.1 million that you were just asking about compared to the $6 million or $7 million budget. Last year was actually 8.3. So I think there's just maybe something the budget's off a little bit on a couple of the accounts that's causing that increase. Still go back and dig into it for you, but if that helps you, it's not as big of a difference as it looks like budget, if you look at what was compared to last year.
Possibly could have been a little conservative on the budget or something.
So maybe this question's for Linda, I don't know, but I think you had mentioned you made 6 to maybe 8 suggestions on things around process and controls over financial reporting so that things are tightened up and we don't, these things are more obvious as you go. Are those suggestions, where are we in terms of implementing those things? Is there anything that looks like we wouldn't be able to do?
Yeah, I'll talk through that. So just to go over the other ones was the check signer authority. That was one of the odd things that I told John about, but I didn't know how to explain or why it was not right. But historically, we've always had council signing checks, which I was never comfortable with, or not council, finance committee signing checks. But I was never really comfortable because you guys are signing checks, you really don't know all the backgrounds. Like through Springbrook, I approve purchases over 5,000. The departments approve all these, and then at the end, we need to have someone sign it that really kind of knows, that can research and do that. And I just didn't think it was really fair for council to be doing that. So John had brought that up, that is an executive branch function, legislative branch function. So that's why we stopped doing that months ago. So we created a signature authority for that, which now the mayor's signature is printed on the checks. I physically sign them, And then as a backup, we have the finance chair is how the procedure's written down, would be a backup. Those people have to be bonded, so there's, some procedure with that. But that's one of the things that we did, and it's made it a lot better because I'm the one that should know the most about it, so my signature should be on there. I should be the one held accountable because I review, I used to review the checks after the fact anyway, so it's better that I review them before they're signed, because then I can stop, and I've caught a handful that we've been needed to redo, nothing major, but being, like they were talking about, being here every day, I know what should be right and what's wrong. So the check signing authority is a procedure we've created and updated. The monthly financial reports to City Council is something that Linda's been working on, and we'll have that for October for council, and because we really should have a report that shows how much we've expended in each expense every month and how much revenue we've collected percentage-wise, right? So we're still working through. The first round is just hard to read, so we're just working through it to make sure it's easy for council to take a look at and read, and for the citizens too, because we can print something off of Springbrook right now, but it's still kind of hard to understand. So we're just trying to get something a little bit more user friendly. So we'll have that for the next council meeting. The review of the city administrator's credit card is one thing we brought out. We have a procedure now that the finance clerk will send the mayor all the statements from my credit card, and that he will verify quarterly. The reason we did quarterly is, we pulled the last 8 months, and it's been used 3 times, one by me for water and 2 times for PD for travel, because sometimes they need a credit card to book travel. So,
How many employees have credit cards?
I'm probably the only employee that has their name on it, maybe. We've got a couple for the office. The finance director has one, Rhonda has one, but they're city cards. So I think maybe.
Those statements should come through every month on our.
They do, and we see them, but.
No, we should have them in our part of our packet as well, too,
Okay,
see what
yep.
the spending is going to.
Yeah.
So nothing hurts when others set eyes,
Sure, absolutely. So that's just one, with me being on the part of the executive branch, it should be reviewed. So that's one that was an easy fix. Updated investment policy, which is what we talked about, a couple months ago. So we've got a draft on that, and we'll be finalizing that here in the next few months. Capital asset policy, which is what Linda has been working on, and I've got some samples for us to do that. And then the review of gas card usage. So even though we do have our gas pumps here, and it'd be really challenging to pull up a personal car to use here, we did our last pump system. There was just no real tracking. The system was not functioning very well, so that's why we had asked council to approve a new gas system, which we have functional now. Now we can track per person per vehicle. So no matter what vehicle I'm driving, I had to put my number in and then the vehicle number. So that just allows us to make sure that we can keep track of who's using the gas on site here. So those are the.
To get gas here than it is to have a car. Just saying
I don't know if
the
it's.
cost of the upkeep of the equipment.
Yeah.
Economical, though, with the underground storage tank system, fiberglass line, all that stuff like that. So.
Yeah, I don't know if it's cheaper. It is much easier, especially for the fire equipment and for diesel, because it's really limited. My last city, we luckily had a business within the city that had tractor trailers, so we would just pay them for diesel. Here, it's a challenge. But the other big benefit is having your own fuel source, because I don't know if you remember, it's probably around 2015 where like Dixie Highway went black, right, for like 3 days. So we had no fuel at my last city. We had to go out. Or anytime.
Tractor
Yeah.
the size of our equipment.
Yeah, but anytime you have power outages, the fact that we have our own fuel here is a huge plus for emergency services. So, any questions about those 6? Okay.
No, I just have a comment to make too, and John, really grateful for your firm. This is obviously a bit of it was a challenging review of the audit. It's a challenging audit. I view it as an opportunity to make, as you said, significant corrections and improvements moving forward. That being said, not to speak about what was done with past audits and things of that nature, it sounds to me like we've already implemented a lot of these corrections, and hopefully future audits will bear that fruit. But we are facing a critically important decision, as we all know, with our effort to hire a new finance director. We're not going to have Linda for the long term, unfortunately. So, I know we've had some challenges receiving applications, and I think that, Linda, you are pretty heavily involved, is my understanding, with receiving and vetting applicants. John, I don't know you on a personal level, but given your resume and your expertise with cities and local governments, if you'd be willing to offer any guidance and advice during that process, it would be really appreciated as well.
Absolutely.
Yeah, and my last time I had to hire a finance director, John knows a lot of the finance directors just by working with them, so I always ask his opinion if he's ever worked with people. So yeah, he's always been an asset, and even though John, does our audit once a year, he's a resource all year long. I mean, he's been fantastic for me over the years, ever since I first became a city administrator, and even now. I mean, he's just a great resource and very thorough and very honest.
I have a question. Matt, I emailed you last week about the P&Ls, profit and loss or any kind of invoices for merchants of music. Linda, I'm going to ask you, how do we keep track of that? Because I asked for P&Ls, we couldn't get them for this year. Obviously, all the numbers are probably already for merchants of music, but I didn't get them for the last couple of years.
Yeah, we've got them all. I'm just waiting on 3 numbers from this year.
For this year, but the last year, the year before, and those were never sent. I mean, how can we make a projected budget for the moving forward if we don't have the proper sheets? Does this new system, I'm not as worried about the past, right? I mean, that's the past is the past at this point. Does the new system, do they have to, the heads of the department have to enter in for each individual line item that we have? That Merchants Music has its own line item. Does that kind of make sense to you? So all the invoices that come in, all the money spent, I mean, we should be calculating the overtime that we give for the police, and everything should be on those, or else we can't do a true budget.
Yeah, I mean, those are all part of the cost, but in the system, that's something that would have to be kept on an Excel spreadsheet on the side, to be honest with you. Because you're right, you got the police department involved. I don't know if you have an ambulance up there all the time, so you got overtime for the fire department possibly. You've got,
Revenue, how much did it cost us
the
for each
revenue, the
band, how much did it cost?
sponsorships.
Yep.
Yeah, and a lot of the core expenditures will come out of the one fund, which is easy to track, but then you've got these other pots of everybody being involved, since it's such a big city event that you really would have to keep some type of a spreadsheet on that and put a P&L together based on that, because you're pulling items and expenses and revenues from different departments and different general fund sponsorships versus community funds or however, so.
I really think it's important for all of our major events, whether it's the 4th of July, Merchants of Music, even as much as Farmers Market or Fleeing the Fort, they don't have to be individualized for days, but for the entire year to see what we spent on these things, so we knew moving forward if we have to cut anything or where we are, where we're going, if we're going overboard, you know what I mean? So I don't know how we're getting proper numbers without those spreadsheets.
Yeah, we do have the spreadsheets for merchants, and I'm not sure if our 4th of July, I have to check on that. The only thing we don't factor into that line item is overtime, so that's just something that we'll have to look at later, because that's gonna adjust. Some years we might need more, some years we might. It just depends on, like this year we amped it a little bit more just because of what's been happening in the world. But that'll be difference. But we can do that moving forward. We'll be able to track. We've got the overtime for this year. Historically, I don't think I'll be able to pull that for the last 2. But that's just not something that, since it's a personnel cost, we just don't have that in the budget line item for like 4th of July and that.
It should be, though. That's significant, right? And
yeah,
also something as far as comp time as well.
I'll just have to, I'll have to see if that's something that we can expense, if payroll can be expensed into a line item. I don't know if that's,
I mean, if it's
you know what I'm
if
saying?
it's on an Excel spreadsheet, it's not God, right? It doesn't have to be perfect, but it should be accounted for. Like, Springbook is God. Once it's entered in that's what it is, right? So when it's on an Excel spreadsheet, it's just a number we have to go off of that we trust for future, costs on this event. You know what I mean?
Well, we do. That's what all of our budget lines, we go off past costs and then what we're projecting for the next year. I mean, that's how we create our
Well, you're not having overtime.
budget.
I mean, it just,
We are. It's just not in not in the events line item, but we can work to see if that's something we can put in.
I just
there.
think we need to tighten up a lot of things, obviously, with this audit, and obviously with a lot of things going on, I think, and with the way that the budget turned out this year with only $16,000 in profit, let's say, that we really need, and we had a couple meetings on how we can thin things out and what we can do. I think it's important that we know exactly where the dollars are going at this point, so we can justify the costs.
Sure. And and I'll have that ready for the November Finance Committee meeting so we can discuss those.
How do you guys feel, you obviously have experience in most of the cities in northern Kentucky, and you've seen a lot of it. And you say that we have a very healthy fund balance. At the end of the year that you just audited, we just allocated around $4 million of our reserves for project, and which will bring us down to about 50%. What do you see as a healthy reserve balance in this area?
So what I use is the GFOA, the Government Finance Officers Association standard, and they have a relatively thin fund balance. Quite honestly, they recommend about 1/3 or 1/4 of your operating expenditures for the year, that you hold about that much in fund balance. And so for Fort Thomas, and let me just look real quickly if you don't mind. You could probably tell me, Linda.
It'd be about $4.5 million or so.
Your operate. 21 million, right? Yeah, well, this is about 24 this year, and so right at about 24 million. So, if you held $6 million in fund balance, the GFOA would say that's about the right number. That is a rule of thumb. There's no there's no law, there's no rule to that. It's a rule of thumb that the government finance officers, and that's a consortium of finance officers across the country who set these policies to help each other out, as guidance for finance directors across the country.
So they use that number, that 24 million includes the capital projects, doesn't it?
Your number was correct.
Okay.
Because this year's operating budget is the same, but we have a lot more capital projects.
Oh, okay.
So it's inflated.
Okay.
So yeah,
So they would like 4.5 million.
so yeah, 4.25, 4.5 million.
Now, the other thing I want to say, and Linda could really help you out with this, and this is where a finance director, there's an advantage to this, is one of the things that you can do is GASB 54 allows you to have committed and assigned fund balances within your budget, things that you have a project coming up that's going to be $4 million. The council could commit that $4 million of your fund balance to that. So if you've got a $20 million fund balance, you could say, well, $4 million of it is committed to this future project. That project may not come around for 3 more years, but you can commit that for that. And there's a lower level that maybe Matt or the mayor could assign of assigned fund balance. And those are things that, maybe we keep so much, you keep 2 payrolls or something in assigned fund balance. So those are things that you could commit or assign so that your fund balance, your unrestricted fund balance is lowered, but you can actually commit or assign things for future projects or future things that you have coming. And that helps to remove the stigma that you have too much sitting in fund balance, basically, because you have these things coming up.
Yeah, I don't know if, I kind of think of it as like, whatever percentage, 20%, 25%, which is kind of the standard you talk about, as almost being an emergency level. You don't want to, if you're at that level, you probably don't want to be pulling out of that for some big capital project, right?
That would be exactly. I mean,
So
that's the minimum, right?
Yeah, I don't think we designate now there within that unrestricted fund balance some sort of emergency level, but that's one of the things I wanted to talk about. And that's sort of the red line. We're, I think, double that now, roughly, after the spending we do this year on capital projects. So we're well above it, but I think that would help future councils, kind of finance committees, think about where you are in terms of what's actually there for capital projects and what's kind of your emergency.
And there are you can also have stabilization funds. That's a very common. Fort Mitchell's got a very interesting stabilization fund where they say if the GDP of the metro area drops below a certain, so many percentage. I mean, it's somebody with an economics degree figured this one out, but that they could dip into the stabilization fund. And so that's a way to say, if there was some kind of national emergency or something where, you needed to, or a, like a weather emergency, a tornado, for instance, something that really incapacitated your city, you could dip into this fund for whatever reason.
Yeah, we had what was called a rainy day fund, so that, and basically set up the GFOA standards for the minimum fund balance, and we adjusted that every year based on the audit results. And that way, if council knew at any point in time, if you're getting close to that minimum amount, you need to start trimming things, cutting back, looking at what additional revenue sources you can bring in, because you're going to need that to operate on. So if you're starting to pull down to get capital projects and you've got this rainy day fund amount sitting over here knowing that I can spend everything else except for this, and once I get close to this, we need to start looking at things really closely. I mean, that's kind of what we did, and it's just kind of a little tickler out there for council to see and to watch, especially when you get the annual audit reports, to see where your fund balance is and what your minimum fund balance is now and how much you have left to spend, and put the capital projects in operations in the future.
Yeah, and sort of an extension of that question, one of the things we've been talking about a little bit is each year when we look at the budget to set, if you're looking at your revenue line item, maybe make your revenue, maybe your expenditures for the next year in your budget, like pick a number, 0.97, 95% of that number, so that you kind of have a cushion built in there, so that capital, project outlook is funded through, additions to the unrestricted fund balance because of that gap.
5% growth.
Yeah,
every
you
year.
see across a bunch of different cities. Is that something that's commonly done as a way?
I haven't seen that done necessarily. Linda, you might be more familiar.
I haven't seen that done. It's a good thought. The only thing that I will warn you, if you do something like that, is most cities, the rule of thumb is always to budget on the conservative side for your revenues and budget a little high on the expenditure side, so you avoid the compliance issue of going over budget. Obviously, when you do budget amendments, if you would like to do something like that, I would recommend then you do budget amendments twice a year. One in December, so that you know where your line items are, so that when you prepare the budget for the following year, you have a much closer look of where you are for the first 6 months of the year, as opposed to preparing the budget in February, March, April, and then not amending the budget till June 30, and then you go, okay, well, this is where we were really at. If we had known this back in December when we were getting ready to prepare the budget, we could apply some type of a formula like that. So that's the one thing you just have to remember, is that the rule of thumb is always conservative on revenues, a little bit higher on your expenditures. So if you're following that rule of thumb and you're using, okay, this is our revenue, we've gone conservative on the budget, hopefully, because, obviously we want revenues to come in over budget, and we're preparing to spend 97% of what we're budgeting. You just got to watch how your budgeting methods when you do that, something like that.
Right. When you just said non-compliance on overspending the budget, what did you mean by that? Because you can always, as you just pointed out, amend it
Right,
if you need to, if something comes up throughout the year.
Absolutely. I mean, it's just like the comment that you got in the audit report this year where you went over budget. So in order to avoid that, that's why usually most cities will budget their expenditures a little bit higher than what they anticipate because there's always unexpected things that happen during the year that are unaccounted for. Things break, things come up, things, all of a sudden we need this, we need that. Wasn't in the budget. So you catch it at the end of the year with a budget amendment.
An amount that triggers, like one of the compliance and accountability points you had is that the mayor is required by KRS to present a quarterly report of any variances in the budget. So that variance could be an overage. Like, is there an amount to where that, is it $1? Is it a million?
I think technically it's $1 by state law. I would never give you a comment for $1. That would, generally what I do is if it's there's a small percentage, I will let Matt know, or I would let the management know you were over, but it was just a few $100s, $1,000, 1% over. At some point, there's accounting issues and things like that. Bills come in a little bit early or something. It's something you can't help. I try not to be nitnoid on some of that. if it's, 10%, over your budget or something, or 5% over your budget, okay, well, that's worth looking at, but.
Some of that's just kind of a different perspective on my perspective, John's perspective as an auditor of, is it immaterial, is it material?
Right.
You've got to look at it and go, okay, technically a dollar's over budget, but is it immaterial, and could we make that up in next quarter? Absolutely. So it's just a matter, that comes into a judgment call at that point in time when you're looking, and that's the point of looking at the quarterly financial statements, just to keep an eye on it as it moves forward during the year to see, okay, well, we were a little over budget then, okay, well, next year we've picked it up, or we've tightened our belts and we've fixed the problem, and just to monitor it throughout the year.
This might be a